Welcome back to Lessons in Property with me, Steve Hand. So if you're new here, welcome to our channel. So when it comes to specialist lending, how specialist can you get? I'm talking about airports, golf courses, wedding venues. How are these things funded? I talked with Chris Buckley at ASG Finance about this. So they're at the specialist end of a specialist sector. I think you're going to enjoy this one. Hi, Chris.
Hi all.
And
How you doing,
before you
Steve?
talk, Chris, I'm going to introduce you because a lot of people will know who you are because you've been in the game for many years. But you're relationship director at ASG, which stands for A Shade Greener, doesn't it? A Shade Greener Finance.
It does indeed.
And we've known each other for several years, haven't we? Because you've been at various lenders. We'll not mention those lenders' names. There's no need to. You've been at various lenders, working as a relationship director, and you've got a wealth of experience. And you've also been in the broker side of this game as well.
Yeah.
But
Just the
yeah,
17 years on that side, Steve.
was it
Yeah.
17?
Yeah.
And did you start in financial services like sort of early 20s or what sort of age?
Yeah, well, sort of late 20s. So it was I was in retail originally, got made redundant twice in 18 months, two different large retailers,
Yeah.
Card Warehouse and Ethel Austin.
Oh yeah.
And then went on to do CMAP. This was back in the days when you used to get an advert in the newspaper, so I
Oh,
followed that advert and did CMAP with a company out in Altrincham. And I've been in financial services ever since. So yeah, that was 2004, I think it was. So
2004, great. So you
yeah,
started in mortgages and then you moved into specialist finance after a few
that's
years or so?
that's right. Yeah.
Yeah. And then at what point did you realize that being originally like a BDM, business development manager, moving on to relationship director, when did you feel that that was like more your thing?
Well, when I was broken, I had a friend of mine who opened a number of estate agents local to me. So I went and worked with him for a while. And they also had access to a bridging fund, and
Mm,
that just found that market really fluid. You're dealing with experienced or new investors, but these are people who are investing. They're not going in there to live in the house themselves. So
yeah.
it's real quick, and obviously that there's more of a business aspect to that in terms of just the speed and what they want from a lender. So I got quite, I understood a lot of the lenders' criteria inside and out. So within 2-3 minutes of speaking to somebody, you had a good idea of where you were going to be able to place this deal. And I think I just enjoyed that. I always enjoyed the relationships I had with the business development managers, relationship managers within the mortgage industry, and especially more so with the buy-to-let lenders, because
Yeah.
again, you're talking to them more on a level of trying to get the deal done and the business done over the line. You're dealing
Yeah.
with a lot of the time you're dealing with experienced, sophisticated borrowers. So I just enjoyed that relationship, and I did a couple of different things happen in terms of the brokerages and whatever that was working for, and it was just a case of making that decision. And I always thought I'd like to give that a go in terms of going on to the other side, onto the lender side, and just knowing one criteria inside out.
Yeah.
Obviously, I still keep up tabs on everybody's criteria because you've got to know what the competition are doing. But maybe the switch from self-employed to employed was a bit attractive as well, Steve, to be honest.
Well, that's it. There's a degree of security, isn't there, in quite an uncertain market at times. And I think in the commercial space, it's. I mean, I've got to say, I've been spending the last handful or so years in the commercial side rather than mortgages, and I love it. I think it's just it requires a high degree of mental agility, doesn't it? Because there's
It
many
does.
moving parts, and every day is very different. There's the diversity of client type that you're dealing with, and what they bring you. Projects that they bring you. Yeah, it's
It
really.
is. That's where it comes back to the knowing the criteria inside out, because it's just about knowing your client or the borrower, what they need, what they can and can't do, what they have and haven't got, and being able to use that to make a deal work. Whether that is other security, other businesses, other assets, uh, or maybe explain in a different way that they've not thought of, such as, that he could have in terms of revolving credit facilities or further advances, second charges, all that type of stuff, which ultimately ends up getting them what they want to be able to grow their portfolio, their business, or whatever it
Yeah.
might be. And I like that aspect of it, is trying to get a deal done and make
Solve the
it work.
puzzle. Yeah, and I think with ASG, we're in a specialized sector anyway in commercial finance. So for developers listening, it's bridging finance, development finance is there. You've got commercial terms, second charges. You've got a whole suite of product types, and ASG are the more, should we say, the more specialized end because you lend on things that most lenders will just like not even consider. And we were just chatting earlier, and if I've got this right, Chris, your sweet spot or your range is typically loans of 500 grand up to about 7 million, unless
That's correct. Yeah,
that's
yeah. So
changed.
500 to 7 million. We can go slightly lower than the 500.
Mhm.
It's just we it all just depending on the type of deal that it is, really, and the complexities. A lot of as you mentioned, a lot of the deals that we'll look at, they can be quite bespoke. They just take some more, sort of thinking, commercial thinking to get the deal done, and that's really what it is. And we will lend on any type of asset, any asset type, rather that we can see an exit on. So whether that be private schools, airfields,
Golf
airports,
courses.
park home sites, churches, synagogues, whatever it could potentially be any of those, as well as, we'll still lend on residential, semi-commercial, uh, love industrial units, warehouse units, anything like that, that we can do. But pretty much anything we can see an exit on. So for us, we always start with the end in mind. So we don't want to have to be the lender who's looking for, where there's going to be problems coming out of the deal in 12 months' time or 6 months' time, whatever the term is. We do have the ability to extend terms potentially.
Hmm.
Um, but we always like to look at the initial 12 months, and we wouldn't start a loan unless we feel that there is an option to be able to exit after the 12 months. If we
Yeah.
think this is genuinely a 24-month deal, we can potentially, look at that as well still. But we
Mhm.
tend to want to see something where you've got a chance of getting out after 12. If they can't, and obviously the loan's being conducted correctly and everything's going well, and we've had good contact with the client, we can always look to extend. But it is
Mhm.
definitely, we'll look at the bespoke type of deals that maybe take a little bit of, different thinking really to get the deal over the line.
Yeah, yeah, and I guess part of the reason that you're a bit more specialised, or you can be, is because and not everyone will get this, but you lend your own money. You're not reliant on, say, funding lines from Royal Bank of Scotland or Santander or JP Morgan or whoever it may be. It's your own money, isn't it?
It is indeed, yes. So
Not
a
Chris
lot.
Buckley's money, by the way, I should say.
No, I wish. I don't think I'd be on this call if I had that money. No offense,
No, no.
yeah, yeah. No, so it is it's our own money, which is generated through the wider Shade Greener group, and a lot of bridging lenders out there will use institutional funding, which is what you've mentioned, where you've got large funders, whether they be in the UK, a lot of US based as well, with
Yeah.
pension and hedge funds. Uh, and a lot of those are based over there, and they are running off the criteria based off those institutional funders. So
Hmm.
that's why you'll find a lot of criteria be the same. People not wanting to do certain asset types or different types of assets, or consider different things. But for argument's sake, somebody in LPA receivership, they may be in the unfortunate position for that. We can look round that, and again, as I said, is as long as we can see that somebody can get out of that loan in
Yeah.
12 months, not just say, oh, we're going to sell it. We need a
No,
little bit
no.
more than that, so that, yeah, well, if I can't sell it, can we refinance it? And if we can refinance it, how can we structure the loan so that even if somebody is currently experiencing some financial difficulty, that we can get comfortable that even should they fail to sell the property, that they can still refinance, or at least obtain further finance to repay us back after the 12 months.
Yeah.
So
What
we
normally
are.
gives you sufficient comfort in that, Chris? If somebody says, yeah, sale is my primary strategy, however, I can refinance and I'm looking at this lender and I've got an agreement in principle, or do you need some kind of evidence, or does it just have to sound like it's plausible?
We can do what you know what we're happy with that, and that it just gives us more than one option. If you're just putting all your eggs in one basket or all your eggs with one lender, say for argument's sake, or with that
Mhm.
lender's basket, then it's just if that lender pulls out the market, changes the criteria for whatever reason, and
Yeah,
we're on month three of a 12-month loan, and there's
yeah,
nobody else going to do that,
yeah,
really niche different type of maybe an LTV. I had one the other day where somebody was looking on a commercial asset and they wanted high leverage and it was 100% commercial product, but they were like, well, this particular lender will give us 73% on the way out.
right.
I'm like, knowing my experience and using that and knowing that current lenders and everything, like I might not be 100% on all of them, but I'll know
Yeah,
73% on a commercial property.
pretty high, isn't it?
There's what one or two lenders are going to do that for you. So
Yeah,
what we can't do is lend today based on that still being. Whereas if that's like market wide, or there's at least all the challenger banks do it. Maybe not the high street won't do it, but the challenger
yeah,
banks will. That's something we can get comfortable with. But if there's just one challenger bank and they've got this one niche,
yeah,
it's hard to agree to that. On the basis that, as I say, their criteria could change in month four of
yeah.
a 12-month
You're at the
deal.
mercy of one, even one or
Yeah,
two, isn't it? It's
yes,
challenging.
that's why we'll know that sale is going to be the number one option. But we just need to know that if that falls down, or we're in month eight and it's not looking like they've had no offers or where they need it to be, can we now start refinance? And the good brokers, as you know, will be on top of that already because they
Yeah.
won't want the client to endure incur any default rates or
No.
or any issues like that because it just ends up being really expensive and unpleasant. We start with the end in mind because we want it to be a good experience for the borrower. We don't want them to feel like this has been a bad experience. So, you've got
No,
to
no.
always be as open as possible.
Yeah.
And also, and sometimes as well, that's why we quite like it when people service. It's not a requirement. You can roll the interest. We roll our interest. We don't retain it. So you get a little bit more day one, even if you do that. But
Yeah.
um, if somebody's partially servicing or servicing a deal,
You'll
obviously
do
that's
part and
hard if
part.
it's
Okay.
there's no income.
Yeah.
If somebody's doing a conversion or
Mhm.
maybe changing a I don't know 5-bedroom house into a 9-bed HMO or something. Obviously, there's no income from that, so they wouldn't be able to
Yeah.
potentially service the deal. But if there is, I don't know if they're buying a semi-commercial unit, there's income coming from the commercial side, but they're renovating the
Mhm.
resi. As long as we get a little bit of something, we've got that contact with the client.
Yeah.
And instead of just completing the deal, February 2025, and then, speaking to them January 2026 saying, can you pay us back that 4 million quid? And they're like, no, not really. And we've had no
Yeah.
contact with them. It's just always that's why I always try and arrange that. But as I say, we're fine either way. It just for me, I just find if you've got that regular monthly contact, then you know whether somebody's also whether they're going to be good moving it on to a term loan potentially or something like that.
Oh, absolutely. And we all want repeat customers, don't we? And if
Yeah.
they've had a good experience with you, why wouldn't they come back? I mean, we've got clients, as you can imagine, that we've placed them with one lender and we'll say to them, look, when you come to do your next deal, we're a broker, we're going to look around. We're not necessarily going to go back to that one lender. It depends on your circumstances at the time, the project that you bring to us. But some clients, and there's quite a number of them, say to us, I like the experience I had with that lender and I want to go back to that lender even if they can get a rate slightly cheaper elsewhere. It's like I've got a degree of certainty here and comfort, and I'm quite happy with that. Thanks. It's not always about the last
No,
pound, is it?
and again, just due to the type of, that might be the case with us, where there could potentially be other lenders out there that are cheaper than us, might be able to offer potentially, different LTVs on different asset types and whatever else. But like you said, I think once you have that good relationship and you've allowed the client, the borrower, to be able to do what they need to do, grow the property portfolio or invest further and earn more money and turn more profit,
Yeah.
and they're happy with you. And again, we'll tend to be more flexible with somebody who we know. A
Yes.
good
Yeah.
borrower who's maybe paid every month on the dot if they're servicing the interest,
Yeah.
and then they come back and paid us back straight away. Um, then that is going to give them a lot more flexibility moving forward, so that
Yeah.
potentially we might be able to stretch to an extra 5% LTV or
Yeah.
reduce the fee a little bit more or whatever, just because we know the client, we know how well they are, how well they conducted themselves last time, and we can
Yeah.
potentially look to do that and reward that repeat business, you know.
We get that message across to our clients that, in the mortgage world, it's a bit more black and white. I know you've got specialized mortgage lenders, but if you take, say, the mainstream high street mortgage market,
Yeah.
it's pretty much black and white, isn't it? But the commercial sector is quite different. And it's very, very right that, Chris, that once you've done a deal with a lender and you've both had a good experience, we've all got parameters that we've got to work within, but you can be at that end of the parameter instead of that end
You
in
can.
terms of like LTV or whatever it may be, sometimes rate, just flexibility.
It is, and it's the same. Like you said, a lot of the time, if you're dealing with residential regulated, uh, you know, mortgage transactions and stuff, it's very black and white that it's either this or it's that. There's no,
Yeah,
and as brokers, obviously, it's just about finding the quirks and the criteria and where you can sort of, use that for your client's benefit. But yeah, in this in the bridging market, it is definitely a little bit more flexible, and
mm,
especially as I say when. You're dealing with lenders like as ourselves, and we're using our own funds, but we're definitely not the majority of lenders use institutional funding now, and again that they'll use that with a mixture of their own funds and be able to chop and change it, so they can actually change the criteria as well, and that's
yeah,
exactly what we can do. We're totally flexible with
yeah.
with what we can do and what we can lend on. There was I mean, it's not something we go out and advertise, but there was a guy, we were doing a purchase of a car lot. So he had a car hire business, but he also had sales business, and there was it was a little bit short on valuation on where he needed to be, but the vendor wasn't willing to switch, and we actually we arranged a loan on his hire fleet of cars. So
Okay.
again, that isn't something that we would normally do,
Yeah,
but it was just because we knew he wasn't selling the cars and we could take a charge, so
yeah.
that's the flexibility that we can use something like that to be able
I
to
like that.
get
Mm,
the client where they need to be, just to be
yeah.
able to get that deal over the line. So,
Well, it's an
again, I
asset,
would
isn't
never
it?
go out and email everybody and say
No, no.
we're doing unsecure, we're doing we're securing against vehicles or anything like that, because we're and this guy, the hire cars were stuff like they were for they were vans and trailers and stuff like that. So I mean, they were beat up. They were
Yeah.
workhorses. We weren't lending against anyone's
The
Ferraris
Max
or
or Rolls Royces or
X5, C classes, anything like that. These were workhorse, transit vans and all that type of stuff. But
yeah.
which meant the value maybe wasn't quite what he thought it was as the
Yeah,
values
yeah.
came in. But it just gave us that flexibility to get the deal done. And
Yeah.
and again, there is no way you'd be able to do that with institutional funder, because they were like,
Oh no, it's like land and property generally, isn't it?
that is
Maybe
it.
a FTSE 100 share portfolio, but
Yeah.
you're not going to get many lenders lending against, I don't know, fine wines, art, or or van
No, and
leases,
again,
maybe.
that's definitely not something we want to get into. We know there's lenders out there that do that on the asset finance, but it just gives us that's their core business. But
Yeah,
this just gives us that flexibility to do something. And it was local to one of our owners as well, so he could just pop in and have a look and see the overall.
yeah,
I
it's always
done
nice.
a site visit. I mean, that's something unique that we also do as a lender, as we go and see every site that we lend on.
Yeah,
So a
good.
lot of the time you'll just have people who they'll just sit, wait for the valuation report to come in, wait for the documentation.
Mm,
But one thing that I find invaluable here is yeah, we visit every single property that we lend on, and that gives us a chance to meet the broker
yeah,
and meet the client, the borrower on site.
yeah.
discuss their needs, what they need, what their vision is,
Yeah.
and then hopefully we can be there for the broker and the client moving forward with their
That's
journey.
that's important. It's traditional relationships, isn't it? Do you know, I was saying to a developer before that I was meeting when I was in Ellesmere Port, and I said it's really nice to meet somebody face to face like this because
Yeah.
we live in a day and age where it's over the phone or it's Zoom or it's WhatsApp or whatever it may be, and it's nice to grab a coffee, three of us, just sit down, have a good chat, and build a relationship. And so you doing that with your customers, it's brilliant. You must have a good retention rate if they're
Yeah, well,
willing to
that's
continue.
what we try for. It's so
Yeah.
like you said mentioned before, it's the repeat business. So, but again, if you get to site and meet somebody, so I was in London on Friday, um, so yeah, I was down in Croydon seeing a commercial site, a wedding venue site down in central Croydon down there. But again, it's quite complex in terms of the client's current situation and the makeup of the build, because there was different elements of the property where they own the freehold, but there were carved out parts of it that were on different titles that had been developed into resi that we weren't taking because they're on different titles, different security. Another lender already had those, but it was within the footprint of the.
Got you.
But trying to understand that when you're looking at a title document online on land registry, and there's this hatching and this colour border and then this colour border and this, but when you stood in front of it
Yeah.
with your iPhone taking pictures or whatever phone taking pictures, and you understand, you can ask the client, is that part of the security? Is
Yeah.
this part of the security? How do I access this? You can't do that over the phone or with a valuation report because you're relying on Mr. Valuer, Mrs. Valuer to go out there and tell you exactly what it is. But on something like that that's complex,
Mm.
it's invaluable,
Yeah,
really.
it,
And
it gives you guys a higher degree of certainty, doesn't it? So I
yeah,
guess you can be more flexible because you
yeah,
see it with your own eyes, aren't you?
yeah. And we try and get out there as quickly as possible. But there's not even as if there's a property that we're taking another charge on. We did a hotel down in Leicestershire and we took a charge over the owner's house because again it had a slight down value. I visited the house as well, so
Yeah.
I went to see the property. Deal was almost done. Valuation came in, and then realised we need to take some other security. Took a charge over the guy's house to get the deal done. And
Yeah.
again, I was down um, in Stansted trying to, taking all the pictures and having a look at that house. And again, it just gives us that security that we know what we're. Because again, on that particular deal, we did to get it done quickly and on time. We did um, a desktop valuation.
Okay.
So we don't normally do that. We
Mhm.
we normally want full red book because a lot of our stuff's commercial. You can't really do desktop on commercial,
Yeah.
especially if it's, you don't have any, the thing with desktops is you need the comparables, don't you? And you can
Yeah.
you get that
Yeah.
on
Especially
Resi.
some of the things that you're lending on. It's quite unique. You've not got comparables, have you? So
No,
like you
no.
said
My
before.
first deal I did was on an airport.
Yeah.
So
Yeah.
I went from doing investment properties and a lot of applications a month doing the same sort of thing or HMOs or this and to doing an airport. So again, that was completely something totally different.
Yeah.
We could get it over the line because the borrower again was top borrower and had other security that we could then potentially leverage against to be able to get him where he needed to be. But
Yeah.
again, that one he paid on the button every month
Yeah.
and paid us back on the day 365. Absolutely brilliant story in that one, and then he's ended up refinances us out, and then um with the term lender. So that was like perfect deal, and that was the first deal I did when I joined here, and that was yeah, it was I think we let about 3.5 million quid on that one,
Yeah.
and that was on a purchase of four. But again, that was because or it's four or a little bit more maybe, but that was a really good deal for me to start with
Yeah.
because yeah, we just deal with everything start to finish here.
Yeah. And of course, you cover England, Scotland, Wales,
We
uh,
do.
Scotland throughout Scotland, or just Glasgow and Edinburgh?
Yeah, everywhere. So in
Yeah.
Scotland, yeah, we've got a large park home site up in north of Dundee. So
Right.
that's and again, I've visited that site, and yeah, it's a fair old trek up there, to be fair. So, yeah, no, we'll go anywhere. Really, in Scotland, there's nowhere really where, again, this is where why we have the 500,000 sort of minimum deal. We can go lower than that potentially,
Yeah.
but to gain, if you've got a couple of site visits up that end,
You're
then it's
site visiting, aren't you? It's more of a personal relationship, so
yeah.
it
And
needs to be a certain
you know
minimum.
what we lend we lend really our average loan size about 1.5, 1.7 million, something
Mm.
like that. So they're on the larger side. But again, they are things that other people maybe struggle to do, just with the type of funding lines that they have. So it really is. They're always interesting. I mean, bridging's interesting regardless whether you're doing
Mm.
resi investment properties, HMOs, or airports. It's a great business to be in because
And
it's
Chris, do you
it's
get that
something
well
different you see every day, isn't it?
say your airport chap comes to you for the airport if he's not used you before, but he's got like residential assets he's looking at as well, and some of it might just be a HMO that he's looking to convert. You'll do that for them, even though
Mm.
they might be able to go elsewhere. They might get a slightly lower rate, but because they've done the airport with you, they're quite happy to
Yeah,
let you do things.
yeah. Again, yeah. So, yeah, that client had residential investment portfolio, yeah, commercial portfolio, different office blocks and whatnot.
Mm.
So, but again, he knows he can come to us if he can come to us with, something as complex as an airport, and that was a share purchase agreement as well. So there was all the complexities that come with that. But if we wanted to do a residential investment property or semi-commercial property, possibly you had one with office blocks at the bottom and residential above. Again, that's something we can assist with. But as you said, conversions as well is potentially something we can look at.
Yeah,
Um, Whereby we previously did a lot of development finance and whatnot. We concentrate more on bridging now,
yeah,
straight bridging, and a lot of development and conversion. But we do really like it when there's a commercial element within it,
yeah,
just because we feel that element of the market is stayed strong,
yeah, yeah. And
given
of course, with
the
the
shock
landscape
waves.
changing. Oh, sorry. With the landscape changing on the high street as well, you'll see retail units, other commercial units, assets that people are maybe getting permitted development for to repurpose into residential assets.
Exactly that, yeah. So we again we can assist with that. So we have our own in-house QS
Mhm.
as part of the ASG construction, which is another arm of a shade greener, which does build houses and whatnot. So again, it's something that we're really passionate about, and we see a lot of. So we can potentially look at those and send. There's a couple at the moment now where there's maybe somebody part built or something. Uh, We've got a QS able to go out there and assess the deal.
Yeah, yeah,
Sometimes they are a little bit harder to get into the part built stuff just because again you got no real view on what's happened before you got there, so
yeah.
it's but we do realize there's a lot of people getting into a lot of difficulty, so you do see a lot of that at the moment.
Yeah, and as long
um,
as you can identify maybe that they've had a project manager on site, certain
yeah,
stages have been passed, you're quite comfortable with that.
yeah.
The relevant boxes are ticked. It's like, right, okay, let's consider this because the risk has been minimized to a degree.
That's exactly it. If it's really high risk and really highly leveraged,
Mm,
it's probably not going to be something we can get comfortable with. But again, like you
yeah,
said, if it's something that's had a really good project manager, good construction team throughout, and it's something that we can pick up because we can see and everything's being done to the
yeah,
letter. It's when people tend to veer away from planning permissions and stuff like that where it tends to get difficult to get it done.
yeah, yeah.
You know,
And besides, well, when you get chance, because I know you're a busy guy, you're up and down the UK, but when you get chance, what does Chris Buckley like to do with his spare time?
got me there now. So yeah, what's spare time? Yeah, no, I mean, I watch Liverpool whenever I can.
I thought it'd involve a ball.
Yeah, you got to do that, haven't you? So, but yeah, no, I like Europe far too much to be a blue. So definitely a red. Uh, Yeah, so but yeah, no, it's surprisingly good season this season. So I wasn't expecting it at all. So yeah, that's what I do. Yeah, I've got two boys. One's in university. He's 20 now, and the other one's 15. So
Mm.
not as full on the parenting side of things. It's costing me more money now, to be fair, but it's
Yeah, yeah, yeah,
not as time consuming as it is.
yeah.
So yeah, no, I'm looking forward to my eldest graduating at the end of this year,
Oh, brilliant.
and
I
then
bet. I bet. Yeah,
I
yeah.
can stop
Oh,
paying his university fees.
yeah.
But then Steve, I'm going to dine out on it for the rest of my life. So because he's at Oxford, believe it or not. So
Oh, I remember you
yeah,
saying. Yeah,
yeah,
yeah. Wow, fair play to him. Well, been brilliant to chat again. Thanks
yeah,
for coming on. Really appreciate that.
yeah. No problem. Listen, thanks for having me on, and yeah, all the best for this year.
So there we have it. What a great episode. So if you're in the market for not just property or land, but something that's a little bit more left field, this is one of the lenders that we consider. Don't forget to like and subscribe. And until next time, see you soon.